stock market had one of its largest dips in U.S. history in the last few weeks. Tariffs being implemented are being implemented at the most aggressive rate any of us have seen in our lifetimes. How this shakes out, none of us, I think, can have a crystal ball to predict. The immediate impact of this is that the 10-year Treasury has been swinging, right? It's been very volatile. Why does the 10-year Treasury come down during these times? Because whenever there's an exodus of capital from the stock market, it usually trends to go towards conservative investments like bonds. The more demand there is for bonds, the lower the yield is, so the interest rate is on bonds, which brings down, because there's a large amount of demand, brings down the 10-year Treasury, that brings down mortgage rates, right? Now, in reality, not all of our buyers have all their liquidity tied up in the stock market, albeit it's a major factor for real estate. However, I think interest rates, in my opinion, are a larger factor for an increase of demand in real estate than the stock market is, quite frankly. And if you do see a reduction in interest rates, I think that could be a very good thing for the real estate market. And this may be what brings it down. This could be a silver lining. On the flip side, my fear is that, Matt, like you were saying, like these guys powered through the last 5 years and built as much as humanly possible. The Wall Street Journal just had a great article yesterday about multifamily development and how this may actually be good for multifamily values and rents because they built tremendously last 5 years. And now there'll probably be less development because of what's going on, right? The future development is going to be suffering, I think, because of this. Now, look, does this shake out in midsummer where there's a deal struck across the board and, prices of things come down because tariffs went down and the aggressive implementation didn't take place and it's just a bargaining chip? Potentially, I don't know, right? Again, humbly speaking, I'm not qualified to give you that answer. Could this drag out another year and a half to 2 years and be an absolute nightmare and drive up inflation and drive up costs? That's definitely on the table. And these things that I'm saying are why the stock market's going on a seesaw every single day, because it has no idea how to react. But with all that being said, like historically speaking, whenever you do have something of this magnitude that creates uncertainty and has potential of a massive financial ramification for everybody in the country, that really puts people on the sidelines, right? People are like, oh wait, you know what, maybe I shouldn't buy now, I need to keep my liquidity. But what I'm seeing is people saying, you know what, real estate's a safe and stable investment, I need to get my money out of what the hell's going on right now and put it into real estate. So if you take the sentiment of real estate's a safe and stable investment and interest rates come down, what's going on may not be good for the broader economy, but it could be extraordinarily good for real estate, right? Like, and I think that's what we're seeing now, a glimpse of it. Will that be the case in quarter two, at the end of the quarter two? I don't know. But that is definitely a high probability for everything shaking out. So for all of us on this call as real estate professionals, this may actually be okay. Now, what that means for the broader economy, the word recession's being thrown around out there, who knows, right? I don't know. And that would obviously impact real estate. But what I wanted to kind of do is talk about, I guess, the pros and cons and both perspectives of, both spectrums of the market from what we're seeing today. What do you guys, I mean, everything I just said, do you guys agree? Are you seeing anything different? Are you having different conversations with consumers that may be having a perspective that, contradicts mine?
Just to jump in quick, I mean, I think I love what you're talking about. I'd say, like, when the market started going up and down, I definitely saw, I think it's more, listen, the pros is, like you said, real estate stable in these tumultuous markets, right? Like, it's a hard asset. I always say it doesn't evaporate overnight. You don't wake up, you're like, oh, it's not
Right.
gone, like it's still there, and the value still, it holds. Like, and then you're in a stable market like the Hamptons. It's like it can be a money parking place in a lot of ways.
Your balance in your account down
And you're like,
15%
ooh, like,
right? Yeah.
oh, it goes poof, this evaporates. But like, and also like and then like on the pros too, I thought the market was overvalued. It was overcooked anyway, right? The market was overvalued. It needed a correction, right? Regardless if tariffs was the trigger, it was a very overcooked market in a lot of ways. It's a more of an emotional and confidence thing, I think, from people that are a little bit worried about the market right now.